Market sold off yesterday on the back of bad economic data, but can it recover some today as we get through the end of the quarter and window dressing? That's coming up on 3 Minutes on Markets and Money. Yesterday, the market started out on the upside, actually looking like we're going to have some follow-through rally after kind of a consolidation day the day before. But yet, just as the markets got going, we got two pieces of really bad economic data. The Richmond Fed Survey came out showing a very big drop, both in just the overall index, but also all through the internal components, new orders, prices paid, etc., all showing declines, suggesting that a recession is really becoming a much higher probability, specifically because we see the same results coming in from the Philly Fed Manufacturing Index, the Dallas Fed. This is something that's been pervasive across the majority of the indicators over the last couple of months, as the economy is clearly slowing down because of tighter monetary policy, higher inflation, and higher rates. Also, at the same time, we had consumer confidence come out yesterday as well from the Census board, showing a very big decline there as well. So again, as we take a look across all these indicators, recession becoming a much bigger reality, and that really spooks stocks. And after yesterday's early morning attempt at a rally at the 20-day moving average, the markets did fall and is retesting now support at these previous lows that we had set back in May. Now, back in early May, the market had bottomed and then rallied into the end of May, and that was really what reduced the majority of the losses for May. After that, June kind of struggled around and then collapsed. We had a big decline in mid-June. The hope here is that with the end of the quarter approaching, that a lot of these mutual funds and hedge funds need to rebalance their portfolios, which are underweight equities, and that should give us a little bit of lift. Importantly, though, markets need to defend these lows back from May if we're going to hold these levels and make an attempt towards that 4,000 level on the S&P. We had added a little bit of equity exposure on Monday. Support is now critical here at this 3,800 level on the S&P. A break below that, we'll have to take that exposure back off, because a break below 3,800, the markets are going to retest recent lows, potentially set new lows at that point as this ongoing kind of sell rallies and more of a bear market attitude continues to prevail in the markets overall. So again, keeping a watch on this. We have a very tight trading range at this point. Again, we might get a little bit of a push here and into the first part of July. That would not be surprising. But as we get into August and September, this economic data is going to start to show a lot more weakness here as the Fed continues to hike rates, which suggests that earnings will fall, and that is also going to bring down prices as well. So again, this bear market likely not over yet. But again, some tradable rallies are a possibility. We've got to keep those parameters very tight in this type of environment. That's 3 Minutes on Markets and Money. See you back here tomorrow.